All right, stock market analysis and projection, important information. I know many of you have been waiting for this, or if you're watching on YouTube, you might have scrolled up to this point. So we're about to bring you a tremendous learning opportunity right now regarding how we approach the markets and what the current conditions of the markets are. And I think you're going to enjoy it. First, of course, this talks about our approach to the analysis and what it means for you and the important aspect of trade ownership. You must own your own trades. You must then handle your own risk management, no matter where the information comes from. All right, this is the market brief for this week. Well, stocks certainly choppy. They fell early and jumped in midweek on an interest rate drop and AI news. And then Friday, we saw more to the upside and a failure as the markets were up very significant early on and then fell quite hard. We saw S&Ps up over 30, down more than 40. And now here we are at midday. And we have the S&P 500 down 37 points. So the market certainly has turned weaker. But I'll show you what that means. Interest rates, well, they fell sharply. We had seen the bond markets really moving downward. In other words, interest rates moving upward in Europe. And that had affected our markets here, but then the interest rate market really moved to the downside. And the the analysis that we've had has really shown that that was likely to happen. So this is based on the information that's coming out on the economy turning much weaker. September rate cut is now, I think it's totally likely. I mean, it's probably now we're looking at another rate cut after September. Tariffs, well, here we are. They're in question as the court rules that they are invalidated. This is likely headed to the Supreme Court, and they're pushing to get it there fast, but we may not know about the condition of tariffs for some months. Alphabet Apple news was pretty interesting because the judge came out and dismissed the monopoly case from the FTC that they were a monopoly, and Alphabet had a big jump. Now, you'd say, well, why does it matter? I mean, so they get to stay the same as they've been. However, Alphabet has been trading at a discount to the techs, and it made up some of that discount on the upside as that news came out. And Apple then will continue to receive payments from Alphabet based on that news. So Apple also moved to the upside. Those did help the market midweek. AI stocks, though, are mixed for the week. This is really important. NVIDIA, which of course has had control of that market, is 8% of the S&P 500. News came out today that Broadcom, that's AVGO, they have huge demand for their chips and they are making ground, they're gaining market share on NVIDIA. So if NVIDIA turns weak because they're no longer the leader in the chips and something like Broadcom gets stronger, well, you can figure out the math. NVIDIA is 8% of the S&P 500 going down. Broadcom is 2.7% of the S&P going up. Well, that puts a weight on the stock market. And we actually see that today as NVIDIA has turned to the downside. The jobs report, well, we had 22,000 jobs created, if you believe any of the bull crap that comes out of the BLS. And that was versus an expected 75,000 jobs. And June revised down to a loss of 16K. Because you can't believe what they said originally. And that shows a really significant slowing in the job market. And just more information on top of like the ISM that's been in contraction for the last 6 months. So U3 has popped up to 4.3%. So make what you will of those numbers because we have been shown that none of them are real. Indexes, well, narrowly mixed on the week. Down early, rallied, came back down. NASDAQ and Russell, as of my last reading at noon Eastern time, were up small. The S&P 500 and the diamonds down small. So we get this mixed narrow week and a lot of chop. And though we did move out of the range that we've been in for a few weeks, it really wasn't able to hold that. So we're going to look at the charts moving forward. So that's what's going on this week and what just some of the market moving events were. Now let's look at the stock market. We're going to start out in the Dow Jones Transportation Average because it gives me an opportunity to do some more teaching, and then we'll move more quickly through the other indexes. We'll look at multiple time frame analysis and projections. Of course, this is all probabilistic analysis where we look at what the highest probabilities are based on the market energies and all of the tools that we bring into this with our proprietary indicators. And I'll show you the market condition monitor. So we'll look at all of this stuff. Let's take a look as I switch over now to the Dow Jones Transportation Average. I want to do this because it allows some teaching and a little bit of a different way to look at it. Let's take a look here at the weekly here. So this is just your standard, candlestick chart with our reversal scout on there, which you can see is a good way to look at what the directional forces are. And the reversal scout is really helpful to us when we look at doing cycle analysis. Now let's switch over to the weekly with a ton of information on here with our analysis that's on there. And all of a sudden, these cycles just absolutely pop out at you. This is a little different because I have the green rising phases where they start with these green ovals, and then the declining or corrective phases where the yellow ovals are, so that you can get a sense for this energetic movement in there. And then I have some support and resistances in there to help you. So you can see that this bottom bracket, which is just a drawing tool, is set at 15 bars. Where does that come from? Well, it comes from me visualizing, or this was observational, of where the significant troughs are. You see our very astute team doing the same thing, where they look at this visual type, observational type analysis, and then bring in the important information that they can so that they can take that information and project. So where are we right now? Let's just look at these next few cycles right in here. We see that a bottom came in here. Remember, this is the range of time that we expected that trough would come right there, and it came pretty much on the ideal. And then you got into this next rally phase. Now, you see this upward arrow pointing here? This upward arrow is here because it's telling you that the probabilistic analysis based on the shape tells us that this next rising phase is likely to threaten this peak. Now, I could have other upside levels in there based on extrapolating from this cycle where the fib extensions are, and they would be higher levels up over here. And I could have this resistance level in here at 69, at 16.9, or this one up here at 17.875. Those are all important levels. But for right now, I just want you to get a sense of the energies. That's why I'm showing this to you this way without a lot of other projections that are in there. The next thing that I want to do is now compare the daily information and how you can extrapolate the weekly information into the daily. And what I'm going to do now is bring in that daily analysis right here. And this is a little different way to look at it, because what I've done is I have put in these what I call cycle trend schematics that are in here, essentially showing you the weekly cycle and how the daily cycles act inside of the weekly cycle. So the forces from the daily cycle, as you see right over here, are affected by the weekly cycle right in here. They're pushing up right in here. The daily is pushing up right in here. And that's this rising phase right over here on the weekly chart. So you can see in here this weekly cycle, it's shaped in a bullish way because this cycle was shaped in a bullish way. So the schematic is showing you the weekly cycle here and the daily ones embedded into it so that you could see all that action. And of course, when the weekly and the daily are coming down together is the greatest force on the downside, and that's what you got. So let's just zoom in right over here so that you could see the beginning of this next schematic right over here. So what I'm showing you is that This cycle, this minor third, as you can see right in here, is coming down, but it's really in a place where you would expect that you would be getting a bottom in there. If that's the case, this is likely to turn up and then get up to the resistance level or through the resistance level. So this is a positive occurrence, and it's telling me that the weekly part of this schematic is likely to continue on the upside. So I can just kind of draw this out a little bit further and say, well, it's pretty likely that that next cycle right over there is going to do something like this, get above that high over there, have continued rally, test that other high, and then when that's over with, come down in some way over here. And if this is still forming bullishly, then it's going to tell me the weekly cycle is still bullish. So this is like a cycle analysis lesson that I'm giving you here that I think is very important for you to understand how the messages from the different time frames work with each other and how you learn these conditions. Please do go to askSlim.com. Go to the top of the web page, the cycle analysis workshop, and then you can you can watch that video, and even on the bottom right is Slim AI, and you can ask some questions about it, and it'll help you understand it even more. So I wanted to give you this lesson. Dow Jones Transportation average still pointing upward right over here, momentum pointing upward here. We have the slim ribbon PO green, and soon to give you an upside arrow. Look at the upside arrows right over here telling you upside resumption. And here you could see the option bias indicator is neutral. It's yellow, and that's because you have this, sideways chop that's going on right over here. It's not giving you much other than saying, well, maybe you can be selling strangles or straddles because, it's kind of in a place where it's not really moving. So you could see there's tremendous value in doing this type of analysis. And I wanted to give you that lesson. Right now, it's pointing to the upside, and the stock market outside of the Friday reversal here has been pointing to the upside. So we're going to jump into the Russell, the S&P 500 with some updated cycle analysis in there, the NASDAQ and the VIX. That's what we're going to look at next. And then we'll take a look at this market condition monitor in just a few minutes. So let's switch over now and look at the Russell. Why am I starting at the Russell? Because the Russell's patterns are out of phase with the rest of the market. The cycle analysis that's in right over here, and you can see the little schematic that I put in here also, so you get a sense of the weekly and daily trend. This is giving you the sense for the upside movement in here. Now, I wanted to put in kind of that tactical look right over there. As you could see, these 15 bar cycles that are in there, and they have affected the other indexes, and I'll show that to you in a moment. Weekly moving up, upside projections up here to 2417 to 2467. And now if I just switch this over to the normal daily look right over here, you can see that what we're looking for is this cycle right in here to give you a little bit of a pullback here for a few days. This is the S&P 500 revision, which is running a little bit longer than what the normal cycles had been, which had been around 18 to 22. This is set at 23 because that's where it's been averaging now. So we're looking for a little bit of a downside here and then moving up again. This is in alignment with the strength that we see here. Look at the option bias indicator on the bottom, keeping you on the bullish side. Here's where that upside reversal came right there. Wow, talk about timely as that kept you here. Remember, slim ribbon is a free indicator. Slim ribbon PO is a level 4 indicator, available at level 4 for thinkorswim. So we're looking for a little pullback in here over the next few days and then moving to the upside. So how does that look when you look at the S&P 500? Let's go to the daily right over here. And you can see that, well, look at the S&P 500. Now, this is revised. We had multiple cycle patterns on here that were looking at how the Russell was affecting it, how the equal weight RSP was affecting it, And now, once we got this low, which we thought would be a few days later and might line up with this, it actually told us differently. And now you could see how the shapes are giving us important information. So this low over here is an anchor point that some people might look at and say, well, that really wasn't the low. This was the low, but on great occasion, you get a testing or a secondary low that actually makes that cycle low. And to all truth is that I didn't give that a lot of credence until I saw how these shapes were forming, and it would have helped me to do so. I've had some conversations with some other members and explaining this, and you could see there's all of a sudden a pretty wide variance in what these cycle rhythms are, even though the rhythms are clear and they're averaging around 23 days right now. This one was 22 days, this one was a long 27 days, and this one was, 19 days. So it's 19 and 27 is 46. Half of that is 23, and that's how these averages come out. So what does this say right now? Well, this is saying that it's pointing upward. I'm a little concerned by that reversal right there that we had today, but this is early. If it breaks down under this level, that support right over there is 63.60.58. That's where that cycle low formed. If it gets under there, well, it says that the weekly peak is in place. Remember, when I did this lesson on the Dow Jones Transportations a few minutes ago, we were talking about how the information works from one time frame to the next. Here's your weekly upside push. Here's the reversal scout giving you that move. This incredible translation where that was your minor trough right over there. Here's your minor weekly trough. Here's where it all of a sudden, in a very pretty way, aligned right over there where I was confused about it before. So I'm glad that that has clarity for me now. And we're looking at this 23 bar cycle moving to the upside, being pushed up by this. If this cycle low gets broken at roughly 63.60, it will tell me that the probabilities are that this weekly upside cycle has peaked. Until then, it's bullish. We have bullish option bias study, bullish slim ribbon PO, bullish cycle formations in here, upward translation, positive translation that says the next cycle will make a higher high, which it actually did already. And the weekly patterns bullish. Everything is bullish, all pointed to the upside. I'll show you the MCM in a few minutes. It's all still bullish. The only little bit of caution is that we have this reversal here today, and the fact that valuations are far beyond anything we've seen before historically, and that's going to make for a lot of volatility. And I'll add in one more piece that I showed a week ago, and that is the shorts in volatility are near a record. There's so much complacency, it's crazy. And volatility is going to come back based on that. So that's the S&P 500. Here is the NASDAQ right over here, and we'll look at it the same way. And you can see this cycle right over here at 23 bars. And this one was far clearer as the shape of it was nice because the NASDAQ was much weaker. And you could see where it bottomed right over there. Look at the bottom here. This one a little bit off because this was too short. This one right on. Here is your Russell as it overlays in here. We'll wonder if that little Russell decline that I showed you is going to get this to pull down but not break the low, and then they all move up together again. That's a possibility. We could get into a chop right over here that we see. And again, the NASDAQ could turn weaker just because NVIDIA looks like there's a challenge to it right now. This all is still positive weekly formation here, pointing up here. Well, this resistance level that it's backed off from right there is at around 23,950. We'll call that there. There's another one here at 23,270, and this monthly one at 24,500. It could get there, but I have doubts it'll get through. And again, valuation is a concern, but everything that we're still looking at here is positive. And the next one we'll look at is the VIX, VIX. So the point that I made and have been making is that the VIX, implied volatilities, are in an area where they should bottom. And we started to see some upside moves here on the weekly chart, but they haven't really gotten anywhere yet. Now, the market, of course, is at an all-time high, and complacency is also at a really high amount based on the amount of shorts that we see out there in implied volatility. People think it's perfectly fine to be short puts, short calls, but when the market starts to get nervous and they begin to buy insurance by reaching for puts, implied volatilities jump. Right over here, you could see that we're in this, what I believe to be the rising phase of this cycle. And look at when you get into these rising phases, that's got you up to about 30. This got you up to about 30. This was up here around 30 also. This was actually 28. This was 30. This was 60 up over there. And we're going to get some upside moves and implied volatility into the 30s or beyond here in coming weeks, maybe coming months. So this says to me, expect to see good movement on the upside. When I look at the daily in here, there's actually two overlapping cycles in here that look interesting. They both look to me like they are valid. And right now, where we are is that we're here where we started to get some upside ticks in this rising phases right over here. And again, this says to me in this rising phase on the weekly, in this rising phase on the daily, it is pretty likely that this market's going to get a lot choppier, and we're going to see swings like today where the market tries to get up and all of a sudden the S&P is reversed by 70 or 100 points, or we get some big downside days. So the big downside days are more likely to come when you get all of the indexes falling together, which we actually have not been able to do mostly. We had one day where they kind of fell down together, and that made this cycle low. So as long as you see, the one day the Dow going down, the S&P going up, they're not all going down together, we're still in the rotation. And the rotation has been positive because money comes into one index and moves a little bit out of another index and comes back into the other index. So all of that rotation has been positive. It will take days where you get 2,000 declines and you get all of the indexes falling, and of course bids coming in for puts and the VIX going up to get any real downside movement and to turn this market down. Until that happens, this market is still bullish. I'm going to look at our market condition monitor and see those conditions right in here, and you will see where we are right now. So I'm looking at short term, and the short term is just looking at, potentially a few weeks. And you can see in here that the indexes are very bullish or bullish as we look at them. So this has all been really valuable. If I look here at the intermediate, okay, this takes into the weekly and the monthly conditions, they're all very bullish. Or the QQQ, which has been a little bit sloppier, is bullish. Not very bullish, but you can see they're all bullish. For those of you that are near term, just a few days, you can see in here, well, they're mixed. And here the IWM, which has been somewhat the strongest, is still bullish, but the rest of the index is neutral. And for those of you that are level 4 members and get our intraday or get our day trader information, you can see in here that, well, this is all neutral. It tried to get up, it couldn't get up, it came down. And for the intraday conditions right now, we're at neutral. Let's go back to the short term and just look at the some of the stocks and get a sense for which ones are very bullish. And I'm going to scroll down here slowly so you can get an idea in here of which ones are reading very bullish on the short term. That's for the next few weeks, couple weeks. And these are the ones that are reading very bullish. Remember, this has our algorithms built into it. It's fantastic, and you can get notified when any of these things change for level 3 and 4 members by downloading our alert application. It's a desktop application, and when something changes and you want to get alerted, it will then give you an alert that comes up on your computer. So fantastic. Let's look at the ones that are very bearish in here, and you'll get a sense for what's happening when you look at these. CrowdStrike, that's one of them that's really gotten hammered. Of course, we have UPS and all of the problems with tariffs and slowdown in the economy that are affecting that. And I'll move down in here and you'll get, there's another one, FDX right along with it. And I'll come down here. Boy, MicroStrategy, very bearish that you see there. And where somebody had asked me earlier on in the show for analysis on the uh, that I saw on the cryptocurrencies, and I didn't catch that before we moved on. So I'm sorry if I did miss that, but we've been negative on MicroStrategy, and I believe that that company is in a lot of trouble. I also believe that about Bitcoin, though there are areas now where they could be making a temporary bottom when you look at Bitcoin or you look at Ethereum. But I think MicroStrategy's got a lot of problems because I think one of the legs that has held Bitcoin up, and this is Saylor's company called Strategy now, is one of the largest holders of Bitcoin, and Ethereum is the company that every all of the money movement around the world is likely to be built on. And if you had any sense that that was going to be the purpose of Bitcoin, well, I believe that is over with. And I believe Bitcoin is going to be a lot lower in the coming year and year after, of course, some attempt to the upside because the bulls are still out there. So I'm sorry I missed putting up that analysis, but you can get a sense in here for the very bearish stocks that are in there. Target, Deere, Kava. Boy, I don't like their food. Kava. And that's it, looking at that. So I hope that was extremely valuable to you. Don't go away because now that I've showed you the market condition monitor, I want you to see something really quickly. Look at this. Matt took you through our day trader, and this is the day trader cockpit 2 that I'm showing you right now. And I just want you to get a peek at how this signal changes to you when it was bullish right over here, and then all of a sudden it started to turn down. As you see, you got this heavy selling indicator right there in the 3 minute, the heavy selling right over there in the 8 minute. It put you in a trade that was absolutely phenomenal. That For a scalper or for really short-term swing traders in the indexes, this is the ES, this is the NQ on our cockpit 2, really put you into a fantastic trade. You could get the day trader service for just 99 bucks for 3 months. And not only that, we have a 14-day guarantee on there. So if you don't like it, just write to us and you're out of it. No problem. You don't have to stay. And That's just a tremendous amount of information that you're going to get. Go back and watch what Matt had told you, or go onto the day trader on our site. There's a 2 hour and something webinar in there that Matt did that's fantastic, that teaches you about how to use the system, all of the great things that are in our cockpit with our new trader radar, and the all of the information for futures on top of our normal cockpit that has our impulse monitor in there, as you could see right over here, where it tells you each of those four indexes and what the conditions are, and when heavy buying or heavy selling comes in, the turbo goes on. It's fantastic. So just write to Matt at askSlim.com and he will then answer your questions, or go to the website up over the top of the right on the front page and click that, and you can get the information right there. And there is a link there for the webinar, so you can watch it. And also, we have a special for our level 3 members. Also, if you're not a day trader, you're going to love that.